Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Friday the 17th. We had the market moving lower here today. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 10 cents to $4.31 even on the December contract. Soybeans down 4 1/4 to 10.06 3/4 on the November contract, and wheat in Chicago on the September contract trading down 7 3/4 cents to 5.54 1/2. Now we do want to pay attention to this U.S. dollar, as it has, I think, played a very important role in this year's new crop export sales. When you take a look at the U.S. dollar, you'll notice we're right near a resistance level. It's going to be interesting to see if we're going to consolidate around this resistance level or if we're just going to move and continue slicing right through it. I know that the U.S. dollar right now, really since March to now, it almost has that feeling of putting in a base and maybe has the opportunity or potential here to move up toward the highs that we saw back in May. Now, if the dollar continues to move higher, that coupled with the fact that we've had the grains rally very sharply due to weather premiums that have been put on due to the excessive amount of rain that is really damaging yield potential in the eastern part of the grain belt, that has caused prices to move higher. When you have prices higher and you also have a U.S. dollar index that is gaining strength relative to the rest of the world's currencies, I think what you get here is lagging export sales. And take a look at this new crop soybean export sales. You'll notice old crop sales have been very positive. We seem to be right on pace for soybeans, even ahead of pace. For corn, we're a little bit behind pace this week, but in general, old crop export sales are doing well. When you look at new crop, it's a completely different story. Look at this cumulative new crop outstanding export sales chart. You'll notice the black line is this marketing year's new crop sales, and you'll see that it's very much lagging behind what we saw in 2010, 2011, 2012, and 2013. You'll see the same exact effect here for new crop corn sales, just lagging behind those years, and really what we're going to need to see is a pickup in export sales to get us back on track. But I wonder whether or not that's going to be possible with prices up where we're at and the U.S. dollar continuing to gain ground on global currencies. This is going to be an issue that we're going to want to pay close attention to in the future. Now let's look at the average basis changes here across the U.S. This is something we typically do on a Friday. Just take a look at the basis environment. You'll notice corn mostly unchanged on the week. Soybeans mostly unchanged on the week. But it's these premium sectors, the river markets, and the crush facilities that really had some big basis fluctuations. The river markets here for soybeans were down 9 3/4 cents on average across the entire river system. Corn river markets lost only a cent. Now, soybean crushing plants, this is the only area that we really saw a decent improvement in basis this week. Soybean crushing plants up 5 1/2 cents. This is really, it's good to see this, and I think it goes with that same story of stronger than expected NOPA crush numbers out on Wednesday. We had really 142 million bushels crushed. Analysts were expecting 1 million bushel less than that. So it was very positive to see NOPA crush numbers come out here above analyst expectations, and it's good to see continued strength in the cash market at these crush facilities. Now, ethanol markets, on the other hand, were up only a penny here. So that's something we need to pay attention to. Ethanol production continues to be well above last year's pace, continues to be well above the 4-year moving average, and it looks as though we are seeing some strength this week in the cash market from those areas. Now let's turn our attention over to the weather outlook. It looks as though today we're seeing highs in the 90s. Now this is somewhat of a concern here to crops, but I don't think we're going to see a significant amount of damage from it. A lot of this heat that we're getting today and tomorrow is going to be gone by Monday. We're going to be returning to more average temperatures here with highs in the 80s. I think this is something that had some people concerned earlier on in the week, along with another heat event in the next weekend. But it looks as though, as the weather markets are developing here, it looks as though that weather event next weekend, which is supposed to be hot, is going to be more isolated and less intense than originally thought. Now, when you look at the precipitation outlook, you'll notice that the grain belt is getting another drink here. Looks as though we're seeing a storm system move from the northwestern part really to the southeastern part of the U.S., so there's going to be a good amount of precipitation going through there. This is going to add a little bit more rain here to Illinois and Ohio on Monday, on Sunday, on Tuesday. These are all areas that you're going to get a little bit more precipitation, but when you look at the 6 to 10 day outlook, the 8 to 14 day outlook, it looks as though it's going to be a little bit drier there throughout much of the grain belt and the eastern part of the grain belt. So that pretty much wraps up today's show. Guys, if you have any questions about what we talked about, please give the office a call. Our number is 877-472-4607. I think the big thing that producers need to be paying attention to right now is that we've had a rally really over the last month, and now we're getting a little bit of a pullback. It's going to be very important to pay close attention to that crop conditions report that's coming out on Monday. If we see any sort of improvement in the crop, I really think that this is going to be a situation that could trigger some more selling pressure here. And we're going to want to pay very close attention to the weather as well, because this is this is kind of a critical time period in the grain's development. And if we don't have any major stress factors on this crop, we may continue to see grains kind of taper off and decline here in price. So I think it's very important to pay attention early or after the market closes to that crop conditions report. Pay close attention to any changes in the weather outlook. That's going to be what's driving the market here next week. Thanks a lot for tuning in. We'll see you here on Monday.